Good afternoon. This Thursday, August 13th. Quite the rally in grain futures today. You know the story now. Wednesday afternoon, FSA released their preventive plant acres much bigger than they thought, and they're still tabulating. Because of COVID-19, they haven't had certification with some farmers yet because they can't bring in that many into the office. So that number could go higher. What this tells us is that when yesterday's yield data came out, the farmers put a higher yield than the average guess, and we said that was likely. And we know that September and October yields by the USDA are going to be much larger, but it's being cut off at the knees by acres being reduced again. And now you add the storm that went through Iowa. Now, since Tuesday, yield data is increasing it from 100 million bushels lost, possibly to 200 million bushels lost. Now, whatever it is, we know is still, in the air. But the point is, perceptions are shifting that this big corn crop that's coming is probably as big as it's going to get. And maybe 2.7, 2.8 billion bushel carryout on new crop is our zenith. And that has the corn, which made this double week, triple bottom at 320, could be about as bad as we are. And I'll show you on the weekly charts that can cement that idea that it could still stay there. Same thing with beans. Beans made a spring low. They've been moving higher since spring, made that summer high, and here we are within a dime of what those highs were for the summer. So things are afoot that are suggesting maybe China will be coming in, buying more beans than we thought here they would, especially over the last 2 weeks. Everybody's been bearish about this weekend's meeting with China. Yet there are stories, and of course when DTN starts producing these stories, we'll be at the end of the move already. But I'm hearing stories about the grains lost to floods, bins that have been flooded out along the Yangtze, pestilence in some areas of the country. It's a big country, if you hadn't noticed, bigger than the United States. And drought areas are adding up. That China will be needing grain. And they're going to want us to fulfill the Phase 1 trade agreements to keep whatever concessions they've received from President Trump, as he's going to be likely the winner this fall anyway in the presidential election. The question is proving it through the election process. But that's a whole other story. Let's not go there. But for now, we've got an action in the grains that suggests harvest lows have been happening, and those harvest lows already occurred in the spring. Let's take a look at it. Here's beans, today's action, bursting through its downtrend line that you cross all the way back to the beginning of the year, significantly closing above that today. Took out a prior high, but not the 902.5 high. That was 903 and 3/4. But still, a Friday close yet even higher confirms this breakout. Now, this is interesting to look at this chart, but first, let's go to the soybean daily continuation chart. And now we are up against resistance here. This is at 905. Today's high is 902.5. So a Friday close above 905 would be significant. I don't know if we're going to get that because these two boosting days like that is probably going to bring about some farmers selling, hedge to arrive contracts. We've got the corn too, a lot of deliverable corn that's probably going to get sold in the next few days because by August 26th it's got to be priced. So we could be at an area here. It is going to stall out. But that's fine because let me show you something on these charts. Let's give us a little more room to do the count. Ever since that low that occurred back in April, the spring low, I've been showing you from time to time how the counts were 1, 2, and then we had the third wave. And I said if we pull back and we hold the top of wave 1, I said there'd be a fifth wave coming. And by the way, we bottomed into a turn day. Well, there's your 1, 2, 3, 4, 5 waves up. And by the way, I can't draw here. And there's your 5 waves up. And the third was a little longer. Now we expected an A, B, C decline. And our thoughts were that A, B, C decline would get down to about the 840, 850 area. Well, turns out this spot number here at 63.5 is about as low as it can happen before it goes up. And as far as this chart is concerned here, if we can get, this is the September contract, but we're tracking so close with November, doesn't really matter. The point is, we can get a little bit of a pullback and a burst, we can start a whole new wave count because this count from here, from this low that occurred up to this high, was 90 cents. Well, now we had a shallow wave 2, and then we can sit and add another 90 cents on. You're going to go, how is that possible? We're at 950. So basically starting another, even a bear market, A, B, C would be to 950. Now, 950 is not impossible because check this out. 950 was where we were at the beginning of the year, 960 or something like that to be exact. And this was also in the 950 range. So considering that possibility could be a retest is not ludicrous. Now, keep in mind, it might take us to January to get there. But the point is we have started a wave and that we're likely have a low in here. And by the way, I'd say we had a spring low. Now, as we move on to corn, This is something interesting to notice. This is the September corn contract trading on our weekly, I should say monthly continuation chart. And look at how we can go back 13 years. And essentially, 307, 310 has always been a good price. Now, granted, the corn crop carryout is bigger this year than years back here. But guess what? With inflation, we should be able to absorb that, and that bigger crop should be worth more. Maybe it's worth 310. And so the September contract has bounced off of this, and we've created this triple bottom on the December corn contract on spreads at 320. Here was a hit over a week ago, last week again, and then this would have occurred here just yesterday. So we had last week, I think this was Friday, right? And then now early this week, triple bottom, and now we fire out of here. Now likely, you've got this gap on the chart here at 42. You got the purple line coming down here. My purple line is a little stronger than the 100-day moving average. I use exponential, and I'm about 105. 100-day moving average was actually today's high, and then she retreated in the close. So this burst is probably going to take on some farmer selling, but maybe we can get a high up here in this 42 range. Yet something here after rallying 25 cents, or 22 cents, I should say, we get a pullback. But the pullback will likely hold no worse than 325, and then we start another lift. 325 plus another 22 cents gets us up near the 350 level, and we start doing these waves. And I even thought about a freeze, but that would occur in this time range here. But if we had a freeze scare, about that's when that would happen and play out. So the point is, spring lows. Check this out. Here's your spring low in April. Now, a technician, or I should say an engineer, would say, 325, 320, it's all the same, it's inside of the realms of slippage. So our spring lows, in a weird way, it was as bad as she could get, and the crop has grown in size. I know there's many guys out there talking 270, 290 new crop corn. I don't think that's going to happen. If we can get some solid action over here on trading action, what's taking place with the corn, and granted, we've spiked here for a week back in July, and she gave it up. So we always know this can occur, but I would suspect next trip down, we're still going to have support 325 and try to get another bounce up. On the, this was the extra chart for my room to draw. Oh, well, we don't need it. Moving on, wheat. We talked about earlier in the week and over the weekend, 388 holding on Chicago wheat. It did hit it on the report yesterday. And, of course, corn will determine, or world values, how we move up. Egypt tended for wheat again today. Didn't really excite the world, but we're all subject to corn or what we get out of world wheat values to get another rally going here. Ultimately, we should bottom out by the 60-day cycle in early September and start a rally into November. Hogs, let's take a peek at this. Hogs have been a disaster, bottomed in April, had that couple-day new lows back in July, a successful holding at the beginning of August, and now we broke out. Classic come back and kiss that breakout, and now as of today, turning back up. What we'd like to see also is the 2-hour purple line. I show this occasionally for you. It got spiked up here a little bit in that volatility, but in general, it's a good chart. And we pulled back, spiked it yesterday and held. We put a spec trade on right at the purple line, and now we're turning up. Something to notice from if this is a low, and we've got that basing action going on, but if this is a low, this is $5.50. First pullback, this is $5.50. Stalling at a previous high, the correction was likely. Now, if this is a friendly market and we're going to get 5 waves up, $5.50 carries us to 56. Doable? We shall see. But as far as the hogs are concerned, they seem to have built themselves quite a floor. The question is, when can they wake up? Well, China will have a lot to do with that. So again, on the hog chart, $5.50 up off this low. If that is a low, back to the first secondary support at the $48 mark, $5.50 up. Just did a fast correction, maybe another $5.50 up. This is Eugene Graner with Heartland Investor Capital Management. I hope you find this information useful.